Ladies and gentlemen, it's your boy Slick Trader. Today we're going to do some technical analysis on the overall market. NVDA, Square, DOCU, Apple, Gold, Workhorse, and Costco, because we have earnings. So, starting with the overall market, looking at the 12-hour, you see that we are in a fallen wedge breakout, and the target for this fallen wedge, if we get above the 20 and the 50, which is 334, we will be heading to the next Fibonacci extension at 338. After that, we'll be going to 355, the 113 short-term Fibonacci, and then we will be going to 362. Fallen wedge target is 358. And if we look back, look on our indicators, you'll see that we are forming a higher low, another higher low, and we look like we are currently in another higher low. See that? 319.25 was our last low, and we made it within about $1. And the reason why we bounce off of there is to keep the uptrend, right? So, another good indication is we have a higher low with more negative momentum, which is hidden bullish continuation. And same on the RSI, okay? So, if we look at the dollar, after looking at SPY, it should be going to the downside or show some exhaustion if this thing works correctly. Oh my god. Okay. So we hit the first target of the dollar, and we broke out of this. Actually, not really. Include all the wicks for the dollar, and we hit resistance. Looks like we're selling off from there. That is really good. Good for the bulls, not for the bears. What's another good indication this might go down is once we retrace 38% of the way, which is 93.62. This would be considered a new low with more positive momentum, which is hidden bearish continuation to the downside. So this means that we might come back and break the low here. That is just very, very, very good for stocks. Now look at the gold. Gold look like the sell-off has been extreme, and we are in the middle of nowhere, right at the 886. We failed. It could be a fake out and jump to the upside, or we can go down and hit target at 168, which is next support. Next Fibonacci is 786, 167.53 cents. Okay, so now let's look at NVDA. NVIDIA is my favorite stock, just technical analysis wise. As you can see, that if we just look at the chart alone, you have this beautiful trend line, very strong trend line. 1, 2, 3, 4, 5, 6 touches, and all these are wicks off. The wicks means a lot of buying pressure, and you can see the increase of volume. On top of that, you see, oh my god, higher low, more negative momentum, hidden bullish divergence. Same on the RSI, hidden bullish divergence, continuation to the upside. Now this bear flag, if this was a bear flag, this would be the target. I doubt it though. I think that NVIDIA is very strong and we're going to continue to the upside. It's above all moving averages on the daily. So we have a break, hook, go pattern here. And we hit the short-term target of inverse head and shoulders on a small time frame, I believe on the 1 hour. So that target has been hit. Our other real inverse head and shoulder on the 4 hour or 12 hour is 540, which is very possible. But if we break 515 and 521, it's off to the races. I would say 565 after that. After 565 would be 629. After 629, well, you know, it just keeps going on and on. There is no resistance. That's why I like NVIDIA. So short term for NVIDIA, we are at critical resistance. It can go either way. Could be very bad, could be very good. We'll just see what the market does tomorrow. But I would not enter long here because you're at resistance level. So a good pullback to 506 would be a reasonable entry for myself. So next we're gonna go to square. If you look at square on the short term, we're making higher highs and higher lows. It's a good sign. So we closed above the 227. Very strong. Next target I would say would be 164. After 164 would be 170. After that, it's off to the races. And the reason why I like these stocks because they're making all-time highs. And if you look, Square has a beautiful trend line of support as well. You have 1, 2, 3, 4, 5 touches. And the only thing about Square is this is a possible entry for shorts. If this was to form a head and shoulder and come on to the downside, it's a possibility. If not, more continuation to the upside. So I believe it can go either direction, but more lenient to the upside. Okay, after Square we're gonna go to DOCU for a DOCU, homie. Okay, so on DOCU you have 1, 2, 3, 4 touches. We broke out of that trend line, which is not a good sign. We tried to attempt again, failed. Attempted again on Friday, failed. So I'm not really liking DOCU. This could be a short-term swing up and then down to the downside. If you look at this pattern, you have a broadening wedge target from the breakout. If we break out from this week, it would be going to 135. If we continue on to the upside, we could be going to the top of this trend line of the pattern, and that would be around 250, 260. But if you look at DOCU, every time we touch this area, we make a new high. If we touch this flat area, we make a new high. If we touch this flat area, we are attempting to make another impulse up. That's on the 12 hour. Now the 1 hour, what I like about the 1 hour is forming a inverse head and shoulders. As you see, DOCU is another favorite one of mine that is a potential to the upside. If you look, if we break out from this, alright, we could just do make a flat neckline. The target for this one would be around 250. So if we make just Okay. So DOCU can come to the neckline and fail and then just come down, or it could just continue on to the upside. But I believe DOCU looks very strongly short term on the 1 hour. I'm not sure if it'll reach 250, but I think 220 short term this week is most likely to happen. Okay. Next one, Workhorse. Workhorse is very strong. It's looking very good. We having a higher low, hitting bullish divergence on both indicators. We had an inverse head and shoulder here. I believe we hit target of that. I believe it's between 25, 26. But yeah, Workhorse looking very bullish. I think Workhorse breaks $25. We should be moving on to 26 and then 27. After 27 it's 30, and then after 30 it's off to the races to 34, 37 and 39. Okay, now Apple. I like Apple a lot. Long term. Short term, you have a falling wedge. We had a fake out here, then we had a fake out here, and then another fake out here. Target for this is 122. It's also confluence with the Fibonacci extension of the 2414. We need to break the 200 moving average of 112 on the 1 hour in order for us to be continuing on to the upside. Break 112, break 113 to form the new high, and that should be a good indicator. Okay. Long term on Apple, I really wanted Apple to come down to $100 basically, just to touch this support, real support, and then $95 to fill this gap area right here. So that would have been good to fill the gap and then continue on to the upside. This doesn't mean that Apple could never come down to $95. It's still a possibility, but I think the bulls have momentum right now to the upside. Okay, so Costco. I like a Costco. Costco got earnings. Costco actually looks pretty bad. As far as you have a Head and Shoulders forming here, you have this resistance trend line closing above it, below it, and it's closing below the 20 and the 50 moving average on the 12-hour. So if we look on the weekly, it's bullish, very bullish, to an uptrend. As you see, the resistance line that I was talking about was from the swing highs. We attempted many times to break, couldn't, but we're still above the 20 moving average on the weekly, so it's a plus. And on the daily, it's above the 50 moving average, which is good. We're really out to 20 in at resistance. I like how they close these stocks right at an area where it can go either direction. So if this was a Head and Shoulder and it wanted to play out, we could be seeing $300 area again, which is fine, because we will still be forming a higher low, if that is the low, and will still be an uptrend. So $300 is a good area to for the bulls. And I had a target of a symmetrical triangle that never got hit, which was this right here. So we had a triangle. Target was 371. It didn't get hit, but you can see it's holding support. So We might go to 371, hit target if earnings are good. If they're bad, then we are going to the downside. Okay, so that is all the charts that I would be reviewing today. I'm gonna add a bonus for SHLL for a friend of mine that loves this stock, so this one's for him. Okay, so SHLL had a beautiful dump during all this, and it was in a triangle pattern. I believe this was a fake out. Take out stop losses to the upside, came back to support, bounced off, and this, if there's room, let's see the 12 hour. There it is. So 12 hour looks really good. See this engulfing candle. These 3 dojis, buying pressures. So this can crawl back into the triangle and break out to the upside. And the pattern with that would be around $70 to $68. Reason for the target is that depends where the breakout is. If it breaks out this time or this time, that's why it changes. You need to be accurate as far as when the actual breakout happens. That's when you do your target. So, but $68 to be on the safe side. And is also the Fibonacci 300%. So SHLL is still in the uptrend because you have this high here. Short term, this is not even a low, so I won't even count that. But this would be the next low. So break the 20 moving average, then it's off to the races. 4 hour 50 moving average as resistance, so that is a possibility. Is this a, let's see if this is a possible to be a bull flag. No, it's way too wide to be a bull flag. Okay, TLT. I wanted to add this one because depending how the overall market goes, as you can see, these are bonds. If the stock market doesn't go up, you have beautiful support here. You have basically like an ascending triangle here, and that is very, very dangerous for stocks. So, and on top of that, you have an inverse head and shoulder, or if you want, call it an ascending triangle. Either way, it will be very nasty for stocks. If we have this golden cross here, move to the upside, we'd be going to 175, inverse head and shoulder target. If we break 167. What's very bullish about this is the retracement is around 618%, holding above it. Yep. Alright, homie.